With tariffs and geopolitical unrest, this year has seen some major market moves in oil, copper, and the commodities sector as a whole. Let's get an outlook for the year ahead. We're joined by Reid I'Anson, economist at Kpler. Reid, thanks very much for joining us. It's a broad question, but what do you think will be the big theme in commodities? Can you single something out for 2026?
I think the big story is, where are the oil markets going? Of course, we have been predicting for a while that we are heading into a oversupply situation in the oil market that began this quarter and will extend into the first half of next year. Price has shown some resiliency, more than we were expecting, say, 2 months ago. And so I think the big question moving forward is, do we see more downward price movement into next year given the oversupply situation, or do we see the Chinese continuing to try and push builds into their SPR, which provides a bit of additional demand to the market and kind of helps to hold up that price somewhat. So I think that's kind of the big narrative moving into the first half of next year.
But you see a risk of oil dropping further?
Yeah, I think, if you were to look at, is the risk more to the upside or downside from current levels, I think it's clearly to the downside, just given the situation around supply and demand. Again, next year we see supply outpacing demand by 1.8 million barrels per day, with a lot of that oversupply coming through the first couple of quarters of 2026. So I think the downside risk is there.
What about this move by the federal government much closer to policies friendly to the oil industry, backing down on the emissions limits, watering down rules on pollution from electricity? This pro-oil shift has caught a lot of attention.
What I find to be interesting is the fact that the Trump administration has pursued a number of policies which are inflationary. The two big ones are implementation of tariffs and also immigration restrictions, and that could put upward pressure on wages. And so we have actually seen the Trump administration pursue a policy of trying to get oil prices down over the course of this year as an offset to the inflationary policies he's taken elsewhere. And so I think Trump is very much a pro-supply type of president at the moment, whether it's coming from the United States or OPEC. Trying to keep that oil price somewhat depressed is helpful for his administration.
I probably put the question in a confusing way. I was thinking about the Canadian government, Reid. There's really has been, the Prime Minister, Mr. Carney, has defied elements in the Liberal Party that are worried about global warming. I mean, he really has gone pro-oil.
Yeah, it's been really interesting to watch the shift in Canada. The Canadian government now wants to, really promote a policy of building stuff. And I think that it, obviously extends to trying to get more midstream infrastructure to get Canadian energy production to the international market. And so I think even just this year, the shift has been notable. And I think we should expect more of it over the next couple of years for sure.
What about copper? Is it a given that copper prices will stay strong in 2026 with all these data center builds, for example?
I think the bullish scenario is absolutely on the table through the end of the decade. Of course, that's compounded by issues on the supply side as well. And so I think the upside for copper makes sense. Of course, you do continue to have these delineations between, say, the international LME and COMEX benchmarks given U.S. tariffs. It has been interesting to watch how the Trump administration has used the threat of tariffs to try and build U.S. copper inventories. And so I think that you could see attempts to do that some more next year. But I think the upside is absolutely on the table for copper here over the next 12 to 24 months.
Any other commodities that you think will do well in 2026, Reid?
Yeah, I think natural gas is very much a bullish play. Again, this is very much on the AI build-out story, not only in the United States, but globally. But, just focusing in on the U.S., we need a lot of additional power generation. A lot of that's going to be localized power generation coming from these small natural gas units. And so I think the natural gas story is probably a bullish one for next year. Of course, keep in mind, we will see a lot of additional LNG coming onto the market as well. So that could help on the supply side for those big import regions of Europe and East Asia. But again, I think natural gas is probably a bullish story here.
What about uranium and the nuclear stocks? Because I wonder, is there a risk that we'll just get dashed expectations when people realize how long it'll take to build these nuclear plants?
Yeah, I would say expect a lot of volatility in that sector. And of course, it's hard to trade uranium. It's not a very liquid market, so you kind of have to trade the miners. But again, I would expect volatility. If you're trading uranium in this kind of nuclear build out, you have to have a 5+ year time horizon, because I mean, the time that this takes to even just get government policymakers on board is going to take a while here. And so you got to have a long time horizon, expect a lot of volatility if you want to trade it, over the short run, I think.
And China, obviously, we've heard, talk and analysis for years that the Chinese economy is struggling. It's tricky to move to the so-called consumption-led growth model. What will you be looking for out of China? Because obviously that's central to the commodity market.
Yeah, I mean, this year they have gone right back to the same playbook that they've relied upon, which is this investment-led growth model, relying on a manufacturing build-out and infrastructure to support growth. And that has only intensified into the end of this year. We've seen retail sales numbers really weaken, and I think they probably double down again next year. We see more investment-led growth. We see a real reliance on inventory builds and net exports to support growth. The currency, they probably play around with their currency as well to support that. I do not really see much of a desire on the part of the Chinese government to shift towards a consumption-led model at this point, and the United States government doesn't seem that intent to push them in that direction either right now.
Reid, thank you very much indeed for joining us.
Thank you.
Reid I'Anson, economist at Kpler.